I would like to welcome all the participants and thank you very much for joining us on today's webinar. As you know, the E-yuan release happens in the wider context of experiments with cryptocurrencies, like one for the QQ system, non-cash payments, developments and advancements in e-payments and the specific e-commerce system. Also, more recent Remin Bank's crackdown on Bitcoin, and finally the declaration on the release in advance. And since autumn 2020, our experts would know a little bit more about the pilotage system, and I'm very privileged to host you here. We have Professor Alicia Garcia Herrero, who has many different affiliations, including the Natixis, also is a adjunct professor in Hong Kong University of Sciences and Technology, is affiliated also with important think tanks like Bruegel or Merix, is an advisor of the authorities and also Asian Development Bank, and co-founder of Bright Hong Kong. Actually, she's an institution herself, as she links the practical insider knowledge on financial markets in China and Hong Kong, and also wider in the region. But also not only a practitioner, but also a scholar. We have also with us Dominika Janus, who is a Singapore-based expert on cybersecurity and military technologies. And she graduated from technical studies in Wrocław and in Singapore, but also holds a degree in cultural study from Warsaw, Asian studies, and also has experience in studies in Korea and China. We have also present Maciej Zuziak, who is a member of board of Chinese Law Association and is specialized in civil law and regulation of financial market, but also is working on a project on usage of intelligence systems in law. Has also experience in studying in Poland, US, and China. He's also learning programming currently. So welcome again, and I would like to ask some questions. With first, how we can locate E-yuan in the context of digitalization of payments in China. And maybe Mr. Zuziak would like to start with a short presentation which show us some statistics.
Thank you very much, Dr. Katarzyna Golik, for this question. At the very beginning, as I am the first speaker in our brief debate, I would like to express my thankfulness for the invitation and for the ability to be joined my fellow panelists today with this brief explanation of E-yuan in the context of digitalization of payments in China. I will share my presentation now. I will rely on it very loosely, as I believe I will talk about this more. But I firmly believe that that when analyzing the statistical data, it's much easier for audience and for other fellow panelists to rely on some graphical materials that comes with it. The first takeaway that I want to highlight at the very beginning of my speech is that the prototype of RMB, the prototype of E-yuan, and the successful test pilot of said program is mainly possible due to the existing mobile payment framework that was implemented in the Chinese market, Chinese financial market, and the Chinese financial intermediaries market in the last 15 years. Judging on the Dashua Consulting survey and study, the mobile payment user penetration in Asia Pacific survey, the China takes first place with penetration that is estimated at around 75%. The second one is Korea and India with approximately 30%. And then there is Japan at the fourth place with the 23% of penetration. That is at this level considered by the specialists to be more or less caste society. Another survey from the Dashwell Consulting that I'm very fond of was that frequency of mobile payments. The recipients have more than 70% of the recipients have acknowledged that they use mobile payments every day. I think comparing to other studies, not coming from this particular consulting group, I think that this 70% is much higher than it really is. I'm quite fond of theory that it's much or less 50 or 60% taking into consideration the rural areas that still have many problems with connecting to this infrastructure of mobile payments. But still, comparing to the other markets, Korea, Japan, maybe Thailand, the amount of digitalization of mobile payments is exceptionally high in China. And this is the legacy of two companies, the Alibaba and Tencent group. Alibaba was founded from what I recall 1991, the Tencent 1998. Those companies, to facilitate their framework, their service framework, have implemented their own measures to facilitate third-party payments. The Alibaba have implemented Alipay in 2004, from what I recall, and the Tenpay and the Tencent have implemented Tenpay in 2005. What is very interesting, very valuable insight from the point of view of software development is that, for example, the Alipay was aimed to promote security between sellers and buyers of the Alibaba platform. As the Alibaba platform was mostly a B2B commerce platform, there was more scrutiny, and there were cases of high mistrust between sellers and buyers. Therefore, Alibaba have implemented its own payment and deposit structure to facilitate a safe exchange between the buyers and sellers of the platform. But the key takeaway from here is that the auxiliary facility that was implemented by Alibaba or was implemented by Tencent, that was at this time a major software developer, was such a success in itself that both companies have decided to pursue this idea on its own and have launched its own e-wallets that was connected to the bank accounts of Chinese netizens and was driven by a high demand of low entry mobile payments. Judging from the CGAP research unit, just in 2018, the total value of mobile payments in China was estimated to be around 40 trillion United States dollars. And this amount is very exceptional when comparing to other countries in the region, and compared to the data from 2013 or maybe prior to that year, when the total value of mobile payments in China was much or less could be compared to those values in China and Korea. The success story of the China mobile transformation have many parents, and I unfortunately don't have time to go over them now. But the main takeaway from my very brief introduction on the linkage between the RMB and the China mobile payments transformation is that the Chinese legislator could pursue successfully the prototype of its own digital currency because the network was already there. With much more of the market monopolized by two hegemons, two mobile payment hegemons, Alipay and Tenpay, it was possible not only to enter the financial market in circumstances where the consumers were already used to the usage of mobile payments, but also to strongly facilitate, to strongly utilize the existing framework. It's not a common understanding that the Chinese RMB will strongly rely on the software infrastructure that was later developed by the Tenpay and by the Alipay software groups. But from this point of view, from the consumer point of view, I have argued and I strongly support the argument that from the consumer point of view, what can be seen as a great advancement, a great utilization of the existing framework, can be also a great obstacle when changing the consumer behavior in the financial market. I'm observing the reviews that come from Chinese netizens very closely, and from those that have already access to the Chinese prototype of E-yuan wallet. And from my assessment, the recipients are very mixed in assessing the freshness and maybe the breakthrough of that technology. Many of them find the current Chinese mobile payment system to be enough to their needs. And the digital RMB as something I don't want to call unnecessary, but something that don't seem very fresh to them. And it's a very interesting argument from a point of view of software development and market innovation. When for us specialists, the Chinese central bank digital currency is a great breakthrough, especially in the consideration of macroeconomics and cross-border payments. From the point of view of consumers who are already used to this very reliable, very fast peer-to-peer payment system, the Chinese E-yuan is much less innovative than what we experts may seem, and that's the maybe a little bit prolonged, and complicated, but that's the answer for the question that Chinese E-yuan is strongly connected to the mobile payment economy in the China, and it's so very rooted in its economy that so fast deployment of the prototype would not be possible without this existing framework. But on the other hand, many Chinese consumers, many Chinese netizens states that they don't quite find E-yuan attractive because it's from the implementation, from the consumer point of view, it's so much similar to those things that they are already quite acquainted with. And I don't want to prolong my answer because I see on my watch that already 10 minutes have passed. And as a first speaker, I feel this strong urge to keep my answer quite succinct. Thank you very much for the question.
Thank you very much for your answer. This is a very important element that probably the E-yuan is not such a shock or such a revolution from this point of view. And I think we'll come back to you also later. I don't know if there are some advocates and comments from other experts. If not, I'm going to move to another question about what's the characteristics of the E-yuan in the context of other e-currencies, especially in Asia. And I know Dominika Janus recently worked on that issue, and I think it will be very interesting.
Thank you for this question. Obviously, thank you for inviting me to this webinar. So, as Mr. Zuzak said, over the last several years, use of mobile payments platforms and solution has exploded in China, and naturally cash transactions have declined. And this is also quite related to COVID pandemic, right? People were really discouraged from using cash. So that's just another element of this whole puzzle. And so this push for E-yuan, digital currency electronic payment, DCEP, comes from a twofold motivation. So firstly, it is supposed to promote domestic economic dynamics, but also with definitely greater state controls, and then to gain strategic positioning and influence globally. Now, this domestic aim is definitely immediate and focused on making a shift on how Chinese citizens operate and what data can be collected and later analyzed within all the existing frameworks that Chinese government is implementing. And this is also related to the aim of CCP on their quest to how to informatize the economy. So obviously international aim is definitely more long-term and more aspirational, I would say. Now, milestones for DCEP E-yuan also include things like creation of a new system in case Chinese existing system and infrastructure would face some problems, and also to boost inclusion in rural areas, so banked and unbanked. And well, obviously, the existence of Alipay, WeChat Pay is definitely slowing down DCEP wider adoption, like no discussion there. Currently, there is a number of areas where E-yuan is tried. So there were 6 more regions added to initial 11 testing sites, and there is this idea that it will be widely adopted in February 2022 during Beijing Winter Olympics. Let's see how it goes. It's quite good for now, so they might be on track. Now, when it comes to E-yuan, depending on its system, it could transform the competitive structure of China's mobile payment market. And so obviously the revenue of private payments service providers. Likely the system design will be disadvantageous for private payment service providers in China, and this is because, unsurprisingly, state-led economic structure. Now, in general, the E-currencies, CBDCs, central bank digital currencies, DCEP, so E-yuan, is categorized as a retail type currency. And this is quite important because I'm going to mention a couple of other Asian E-currencies in a second. There are 2 types of E-currencies, retail type and wholesale type. So retail one, like DCEP, is used as kind of extension of cash, as cash. And then wholesale is only used in the interbank market. Sorry for those details, but they will be essential later on. So DCEP is likely to allow some basic programmability involved in transaction and offer users the opportunity to access the currency through software wallets. But as of May this year, smart contracts were not planned to be included in e-currency. And the opinion of People's Bank of China, like people who are dealing with E-yuan, was maybe later, but now, for example, smart contracts are not safe enough. So whenever I was checking if smart contracts are a possibility, the comments was, it's not safe. There is too many vulnerabilities that could affect Chinese users. So yeah, pilot testing sites were in China focused on large cities where there is a lot of consumers, digital savvies who could be more tempted to use E-yuan. And this is very interesting when we look later on at other countries, especially my favorite, Cambodia. Yeah, there is a number of banks that are helping People's Bank of China in implementing this, because DCEP will have a two-tier structure. So you have like China Postal Savings Bank or Xinte Digital Technology Group that are also involved in this rollout. So the structure of DCEP will remain anonymous, which is the biggest question, I would say, because in case of e-payments, there's very little anonymity, right? So it will still maintain cash-like circulation. Merchant banks, vendors, right, so like Didi, they will not be able to trace historical data without user consent, but People's Bank of China will be able to access all transaction data, which is later on quite related to how things like social credit score are working. And so the introduction of E-yuan is motivated by a number of factors, right? So there is the dominance of private firms that Mr. Zuciak mentioned. There is also harnessing market share and tech innovation on the private firms, and this been mentioned in CCP documents in recent years quite a few times. And yeah, the CP development also comes against a backdrop of China's broader push to internationalize yuan. So how the development looks like compared with other Asian countries. In certain central banks in advanced nations are unsurprisingly formulating plans and researches on e-currencies. And since I'm in Singapore, which is considered a fintech hub, I'd like to mention Singaporean efforts, maybe contrast them to yuan. So there are two significant attempts to try digital currency. And the first one was in 2016, when Monetary Authority of Singapore introduced, together with Bank of America Merrill Lynch, for example, and HSBC, a proof of concept of interbank payments using blockchain technology. So DCEP is not using blockchain, right? And this Singaporean project was called Project Ubin, and later on, it was, well, this year actually, it was used on digitalized commercial bank money, but it never evolved into CBDC proper. And now building on this experience, so 4 years of experience, Monetary Authority of Singapore is now partnering with Innovation Hub Center in something called, something that is a wholesale CBDC project, Project Dunbar. This will explore smart contracts as opposed to Chinese attempts, and algorithms to enable more efficient matching and settlements of foreign exchange transactions, something that yuan is totally not doing for now. Now, what is Singaporean perspective? And even while they're working on multi-currency CBDC, it is widely considered that there will be a fragmentation in the region, and multiple regional platforms of e-currency will evolve and develop, and there will be no unity, no one digital currency. Singapore is definitely exploring this with great caution, especially implementation of retail CBDC, because they still don't consider it safe enough, and they don't think that internet penetration is big enough for even for Singaporean market. Now, Bank of Thailand also tried a prototype of CBDC-based payment for businesses, and this year they started working with China on transboundary solutions. The Bank of Korea, even though there is quite a lot of news that Korea is so well developed and they're working on their currency, they're not. They're only starting a research, and the platform that they're going to try out will only happen from August to December this year, I guess. And Naver and Kakao will try to join the bid together with central bank pilot program, which is quite similar to what China is doing with E-yuan and all the pre-existing e-payments. Now, I mentioned before that Cambodia is my absolute favorite, and it is because last year in October 2020, they became the first Asian country to formally launch e-currency. And this is quite interesting because they're emerging economy with relatively weak existing system, and what could be their motivation to pursue this kind of project. So basically, this currency called Bakong was co-developed with Japanese blockchain startup. So this is the first big difference between Cambodia and China. And it turned out to be quite successful when it comes to implementation. But one big problem arose, and this is something that also was mentioned in the previous presentation. So people didn't want to use it that much because they were used to pre-existing e-payment solutions. And as funny as it sounds, it might be a lesson learned for China, maybe, in implementation of their solutions. So just one last thing, because I can see that my time is already out. The PBOC is working with other central banks, right? So with Thailand, as I mentioned, but also with United Arab Emirates, with Hong Kong, to explore options for digital yuan. And China could definitely fit its e-currency into global strategies, especially taking into consideration Belt and Road Initiative. I guess that's it for now. I hope to explore it more in the question section.
Thank you very much for this wider perspective. And when we are moving to transnational topics, I would like to ask how the E-yuan and its implementation can potentially impact financial markets, their stability, and also what can be the cross-border implications. So maybe I will pass the voice to Professor Herrero.
Thank you so much. Well, thank you for the invite again and for the interesting presentations. It seems the host has disabled participant screen sharing. I was trying to share my screen with a few slides when possible. If not, I will just...
You will become co-host, Professor.
Oh, thank you.
You will be the co-host, and then it will be... then there shouldn't be any problems.
They're not absolutely necessary, just only if possible. If not, I can share them later. It's not a big issue. I don't think... Yes, it is fine now. Here you go. So I hope you can see the slides. Yeah. So first of all, I mean, I've learned a lot from the previous presentations. I think it's such an important topic for the world, for Europe. I mean, the topics were different. One thing is, of course, payments and digitalization of payments, and I think we're all there. I mean, it is undeniable that China has moved very fast on that front, but I don't think that's a game changer. It's an efficiency issue, yeah? I mean, saving transaction costs, etc. But the digital currency, and by that I mean, of course, the central bank digital currency, and not so much crypto assets or digital assets more generally, is indeed a game changer, especially from the perspective of its cross-border use. That's why I'm going to focus on that. I realize that I'm expected to talk about the impact on financial markets, which I will do right after these slides. So, although Dominica has already said a lot about the importance of the issue and differences with other attempts, including Singapore in the region, I have to say that the whole process or the whole discussion of the cross-border use of the renminbi in itself is very opaque and difficult to follow. So on the one hand, you hear, you know, Governor Joe, ex-Governor Joe, probably in a moment of despair, to argue, yes, you know, this is all about the dollar, the demise of the dollar, and we want that for, you know, and that's what we're doing this for, in a nutshell, to denying it and just saying, you know, this is a domestic issue, and we're not even thinking about cross-border considerations. So you are really all over the place. If you follow the topic, you don't really know what's the ultimate impact of such a project, a digital renminbi cross-border. So whatever I say is, again, subject to future developments. We really can't tell. But I want to start by saying that the way you design your digital currency is actually quite important in not only for its domestic use, but also its cross-border options. And then I'll talk about where the PBC stands on these different options and some conclusions. So on the first, when you design a digital currency, there's a number of decisions you need to take from the way you, so the technicalities, whether you use blockchain technology, whether it's a centralized ledger, whether it is traceable or non-traceable, and whether, and this is the third important decision you need to take, whether it is wholesale or retail. And I think the PBC has gone through different phases in those decisions. So by now, what we think we know, again, because it's all very opaque, is that they've opted for a centralized ledger. Yes, blockchain technology, they keep on telling us, but a centralized ledger, meaning they can, of course, centralize and trace every single transaction. And then it is traceable, acknowledgedly so. So the holder of the e-renminbi will be, can be traced. This is important for capital flight, as you can imagine. And the other one is that although it will remain so far wholesale, i.e. not competing with banks in terms of capturing deposits, or for that matter with other payment systems, because they have already signed an agreement with Alipay, and the idea is that they are using those venues. However, they also have their own token to make very clear, the options very clear, that they could, if they wanted, bypass the banking sector, bypass the retail payments system. And that is a warning signal for financial institutions in China. So I think they are really opening these options. You need to give me a second. I need to close the window. It's too noisy. Sorry. Okay. So on that basis, I think these options they've opted for, basically, why? Because of the needs, because of China's needs. So first of all, China, in a way, needs traceability, again, because capital flight is an issue. It needs to be able to control the intermediaries because of another external, capital flight is not external, but this is indeed an external threat, which is sanctions, because it can then eventually, for whatever transaction is needed, operate directly with a central bank. Yeah, this is already the case without the renminbi. If you look at a renminbi central bank swap lines, yeah, say Russia or even Iran, they can do direct settlements between central banks. And this is only going to make it so much easier because it's going to be possible, and this means without SWIFT, without going through SWIFT. And this is going to be possible even for wholesale or even retail transactions with the e-currency. So I think it's important to realize sorry, I've not been moving my slides. I was too obsessed with what I was saying, but here you have all of these design options I referred to, whether restrictive or identifiable, universal, etc., and why China decided what it decided, which is right here. So now, beyond the fact that the design really is akin to China's needs, another important need is to internationalize the renminbi, because it's not enough to be able to bypass sanctions. or some targeted amounts among central banks. You also want to eventually make sure that you can run a parallel currency if need be, so that you're not more structurally, just not for specific sanction, dependent on the dollar. And I think this makes sense even if there weren't sanctions. Yeah, I mean, the power of controlling or issuing a reserve currency is so important from seniorage. Of course, seniorage nobody mentions anymore because interest rates are so low. So seniorage role is low, but it could be high one day. It could be important one day. I mean, we just don't know. It's just one more asset, one more instrument in China's hands, let alone facilitating trade and investment. I mean, if you read, you know, in the good old times, our Monet reports, all of those reports justifying the single market in Europe, well, and actually even more so the monetary union, a lot of what was said was that a single currency, i.e. the use of your own currencies rather than the dollar, would actually foster trade and investment. So that's true for China as well. I mean, at the end of the day, they're still heavily dependent on the dollar to a large extent for their own trade and investment, even their invoicing. They've done some inroads on renminbi invoicing of some specific commodities, oil in particular, but it's really minimal compared to their exposure. Soft power, you know, extraterritoriality, which they're trying to achieve without an international currency, meaning through the, of course, the counter-sanction bill lately. But it's like it doesn't really bite, because once you move across border, you cannot impose those. I mean, you can hurt, and that's why the bill is there, other targets within your market, but you cannot necessarily hit the right target because it might not be in your market. So that in itself is a big reason for China to want to have an international currency. And of course, the impression, I want to say and talk about the fact that it might not be so easy though. The impression we gather is that China can do this simply by what I call squaring the circle, meaning issuing a digital currency, which then would solve all of the problems. Yeah, capital account convertibility, because it's traceable. I can let it go. I can open, but I can check, you know, kind of exposed and then react on it. So as if, again, the digital currency could solve all these problems. This is totally different from our discussions in Europe or even the US as to what a digital currency is about. It's basically, and you are prompted to do so because there is no cash circulation. But here is about internationalizing a currency. I wouldn't say this is the one and only objective, but it's clearly very important. So can they reach that objective? And I think, frankly, yes, partially. So what's the difference, basically? Just imagine you are Thailand. You're Thailand. Now you have Alipay. So you already have kind of absorbed or, you know, imported Chinese payment systems. And so far, so good. One would argue it's just the same thing. It isn't, because the legal tender behind that platform is the VAT. But now the big difference is that Thailand would need to accept somehow that a different legal tender circulates in the Thai economy through that foreign payment system. That's the difference. What's the consequence? The consequence is that imagine that, you know, because of the importance of Chinese tourists in Thailand, you get, I don't know, 10% of GDP in a different legal tender circulating. You may also have issues to control your liquidity management, as we say, you know, central bankers within your own currency. And because this is not in the banking system, I mean, say Argentina or many other dollarized economies had dollars in the banks, yeah? So dollars in the banks, you can impose a reserve requirement. You know, you can basically, as a central bank, somehow control the liquidity of that foreign currency. But with an e-currency, same as cash, you can't. Just that you cannot have 10% of GDP in cash, but you can have 10% of GDP in digital currency through commercial payment systems, digital payment systems. So that's the challenge. How to, I mean, what can other countries do with that reality? Now, some don't have much choice. In fact, the Bank of Thailand has signed, I think it's somewhere in my presentation, it's in a working group with the PBOC to be able to do this better. Hong Kong Monetary Authority, then you have SWIFT having signed a joint venture for cross-border payments. So, you know, like in a way, people want to jump on this opportunity because it's also an opportunity in different ways, certainly for the Hong Kong Monetary Authority, no doubts about it, but also for SWIFT. So, you know, it's like, although you may see the challenge as a central banker of UAE has also signed kind of an MOU with PBOC for this. So here you go. I think, you know, what this means is that we are in uncharted territories because this is like cash. So cash in circulation with, you know, dollarization. We learned about what it means, you know, unrecorded activities. You don't know what's going on. You know, you may have regulated activities that you cannot follow through. I mean, all of that, as you can imagine. But this share, I mean, the importance of that in the economy can be much bigger with the digital currency. That's the difference. And I think that's why this is a big issue. And I mean, I conclude and I just add a little bit on financial markets, if you allow me. I think the key question here is, okay, we understand the rationale for, I mean, domestic reasons. China is in a way already digital, so I agree with that point before. Whether that ultimate cash or base money, as we say, is digital or not, is not a big deal. It is a big deal, though, if the PBOC threatens the banking sector. I mean, it's a new tool of control of the banking sector because it can always jump on them by using tokenization. So it has more an additional lever on the banking sector. That's, for me, the main issue domestically. And also, it can use negative interest rates or positive interest rates on digital cash to attract more into cash rather than deposits. So it basically fully controls the banking sector beyond what it already does. But for the cross-border use, that's where the juicy part is, because the real question is, by giving China a first mover advantage compared to the dollar or the euro, which will surely come later in the game, what is China getting? Is it going to be easy for China to push the use of this currency beyond Thailand, which is very dependent on China, at least tourist-wise? Because for me, the first phase is to bring the e-renminbi with China's own interest, whether it's citizens, tourists, companies, you name it. But going beyond that is quite hard because you need price stability, you need people to believe in to rely on your currency, trust it, and also to be able to move in and out. I mean, the convertibility issue is still, traceability is maybe convincing for the PBOC, but not necessarily for a foreign investor in China. I mean, actually, it's a disadvantage. So I think, to jump beyond the use of its own economy, citizens or companies, it's going to be hard. And the question is how much more China can do. I mean, what else can China offer to get there? How important is it for China to have a currency that can at least, if not compete, be used as a reserve, as a parallel currency for the dollar? And these questions brings me finally to the financial sector, because whether China can move beyond that makes a huge difference for basically the financially opening up, not so much the opening up, but the acceptance of the rest of the world of Chinese underlying. So cross-border flows into China, how fast they can increase. The digital currency as such only will not make a big difference. But if by then, markets are captured, there's many more countries that sign these MOUs that do have part of their monetary base in renminbi, that will be easier. So that jump, that's the key question. Can this be done without opening the capital account fully? It all depends on how exposed traceability can be implemented. Maybe Dominica knows much more than me about this, given her background. But imagine I open fully and only use my ability to trace when it's extremely important. Yeah, and so for 99% of the investors in China, it doesn't really matter. They can freely move in and out. But for that 1%, it does matter. So depending on how cleverly they use this, we will see more of a massive inflow to China or less of a massive inflow into China because of the digital currency. So that's all from my side. Thank you.
I'm very grateful for this in-depth comments and highlighting important mechanism. And I would like to open the floor for discussion between our experts, especially that you already covered some security issues for China and its economic partners, but if you can elaborate more about it. If you also would like to highlight some other elements which were not present in discussion until now.
So I would like to start if possible. So as mentioned before, there are already existing regulations, right, in case of fintech companies, and China really stepped up the game in the past years. So this strong growth shows general concern about crime, but especially about corruption. And hence this whole discussion about privacy and data security. So this is very much a domestic issue, I would say. And the issue with fintech is that all the attributes that are so attractive to legitimate users, right, they are exactly the same ones that are usually most exploited by criminals. And so we're talking about the speed of those payments, right, of the use of technology, the anonymity or pseudo-anonymity, traceability, quick cross-border transfer also. This is all used by illicit actors. Now, the criminals can use all of this to carry out money laundering on a huge scale, but in the context of CBDC, in the context of E-yuan especially, I think it's a way of allowing Chinese citizens to benefit from the speed and convenience of the digital payments are giving, but without this higher financial risk and which we often associate with, say, cryptocurrencies. So that's how I would characterize it. But obviously, domestically, there is also a discussion on the access to transaction data. It's already been discussed here a little bit. So that might infringe data privacy when it comes especially to external users. And so DCP will just, if that works, it will strengthen CCP's, digital to do a really good surveillance domestically, and perhaps by exporting its standards, right, and standard setting options, export that abroad also. So this elimination of previous constraints on government data collection definitely represents a significant risk to long-held standards of some sort of financial privacy, which is usually upheld in free societies, but obviously customers of
Dominika, please unmute yourself. So.
Yeah, that's it. But thank you. It was a perfect moment to mute me.
No. Something got wrong with the system, and you haven't been unmuted. As it's lovely always to listen to you, and thanks for all these comments. And would any of experts would like to go on with some of the topics mentioned? Well, I don't see that, so I would open the floor to questions. I don't see any in the chat box, so if you would like to have a floor, please raise the hand. All right, I don't see any questions from the audience, so I would like to ask you then for some final remarks. Many of sum ups was there, but then we will have like a few minutes of conversation, highlighting the most important elements which you would also like to underline. Professor Herrero?
Thank you. Well, I just want to say that I just think of an emerging economy now. Okay, well, so basically, in Europe, I mean, to not for every country, but for most countries, we have a single currency. It's a reserve currency. I mean, the risk of carving out basically monetary base from a renminbi is rather small compared to, Southeast Asia. Lao PDR now, say you're Lao PDR. I mean, the probability that renminbi in circulation, which of course is already the case, increases massively is quite high. What this means is that beyond other types of economic dependence from lending, I mean, a lot of debt, but also trade and FDI, it becomes even more concentrated in China is obvious to me. And I think this is kind of the first step to in a way, like an additional way of influence. And I think this is something that the rest of the world needs to think about in terms of their own speed and their own plans with digital currencies. So that's just my last comment for today.
Thank you. Dominika, Janus?
Sure. Well, most has already been said, but I just want to add, as a way of summing up, that if the CEP works out, it will definitely give China the lead in harnessing this computer science-based financial technology for its economy. I'm seeing in tandem with China's moves in Belt and Road Initiative, this kind of political and diplomatic implications of E-yuan, they definitely should be observed, because the risks that might arise, they can really serve as call to action for global policymakers. But that's in the future, obviously.
Well, the future is also important, and we're actually talking more about the future, which with only some basics arise at the moment. So of course, always a bit speculative, but this is what we also need to consider. And the future is happening partly in China. And then Maciej Zuziak, some final remarks?
I think that the most important things have already been said, and it's quite difficult to pack this very complex topic into 1 hour discussion. I'm very thankful for Professor Garcia Herrero remarks and for the highlighting that indeed the E-yuan will be legal tender, and it's something that is very important to highlight. And I think that in the final remarks it also should be exposed. I'm just curious about how the E-yuan test program will develop, because from my perspective, from perspective of the domestic markets and financial regulations, the China Central Bank, before taking international markets, must push this project in the firm position in the domestic markets. And whether he will succeed in that, that's the question that troubles me greatly, because from my perspective, the major plan of the central bank, Chinese central bank, is to maybe use this whole infrastructure that was created by Alipay and Tencent to fill with this legal tender. And that's the quite valuable insight and quite valuable experiment. I would compare it to the irrigation system that was built for a very different purpose, but now it will be used to facilitate something completely different, some kind of digitalized legal tender. But the success of this story is yet to be unfolded, and I think it will be quite valuable research material, research data to observe how the digitalized legal tender is winning or not the hearts of consumers in China.
Well, thank you very much for these comments, and my sincere gratitude. Oh, Professor.
Very quickly, I have a question, if I could, because it's very important what you just said, Marcia, and any of you might have an answer. Don't you think, I mean, that's my sense of things I may be misreading. Maybe I've read too many spy books lately, but the question I have is, don't you think that China has already used this threat, which I was mentioning, towards Alipay and Tencent, in as far as it's showing with tokenization of its own currency in the few places where it's actually used it, in Guangdong, Shenzhen in particular, that it can go without, because otherwise they may not have accepted data privacy law. I mean, of course, they need to accept, but the point is the willingness to accept very much depends on the fact they have no choice. They need to accept this legal tender. So their margins, their data, basically what all of this means is that traceability basically equates to the central authority having the data, not anybody else having the data. So if you see what I mean, it's like, yes, at the beginning, maybe it was sold as a win-win, but now increasingly it's like no longer a win-win. I mean, you need to do this for me kind of idea. And that's the way I read it, but I don't know how you feel about it. I wanted to hear your views.
I absolutely agree with Professor. From my point of view, it can be described as the most peculiar merger in history, when the private company is merging with a state on the state rules only. So I think, yes, that's the key idea, that's the master plan. Closely following China's securities market, we can notice that the value of shares of Alibaba shares have witnessed quite a surge, and it's connected with quite of disappearance from a public outlet of Jack Ma, and the changes in some corporate governance of both companies. So I think that, yes, that the key idea when implementing the E-yuan is not whether the Alibaba and Tencent will cooperate, on just how they will cooperate, and how maybe it's more how they can be utilized to cooperate, because the policy making is on the side of the legislator alone. The decision, the scope of decision of the board, whether it's Alipay or Tencent, I think it's very limited, and all they can is just just pass the legislation, the internal legislation that will comply with a Chinese policymaker. But still, I think that the Chinese bank quite struggles with this shift from this total control of this Tencent and Alibaba, because this is a quite big infrastructure and they can't just nationalize it. They must smartly take control of it, but in a way that will not decrease the value of both companies. And I think that's the hardest hardest puzzle in this game, how to not decrease the value of those companies while taking much more control over this intermediary system.
All right, we are perfect with the time. Thank you also for your discipline. I know you have very fantastic knowledge on multi-sectoral issues. However, we'll be, I think, about to finish. And again, sincere gratitude to all the speakers for kindly accepting the invitation, for the audience, also for our partner institution, the Military University's Asia Research Center, and for Michał Kołakowski, who has introduced me to Professor Garcia Herrero, who is also here. Once again, thank you very much and have a wonderful afternoon or evening.
Thank you.